All right, welcome back. There's been a lot of focus on Bitcoin lately, and its record high was around 126,000 and change, right? And today it trades around 88,000. So why this sell-off, you ask? Well, it all starts, I say, with Japan, which appears to have been spooked by some hawkish Sunday night comments by the Bank of Japan, which continues to say that they may hike rates for real someday. This time they mean it, I think. Japan's role as a major source of global liquidity is key because any shift toward a policy normalization, which would tighten things up a little bit, that'll have implication for the carry trades and then obviously maybe Bitcoin. Also, Powell's comments a few weeks ago, or maybe about a month ago when he last cut rates, saying that the next rate cut by no means was a foregone conclusion. Well, that was really where it started, and then we add on the Bank of Japan and raising rates, and that market really started to go south. So does the rest of the market need Bitcoin to rally again, to feel like it's safe to get back in the water? My next guest watches this stuff like a hawk. Please welcome to the show, Mr. Eddie Ghabour. Eddie, thanks for being on.
Thank you.
Appreciate you taking the time. I know you're busy. Yeah, okay. Is Bitcoin the North Star for the equity market? Do we need to see that come back to help the equities? What do you think?
I think you need to see Bitcoin bottom in order to get the tech trade and the AI trade back. Whether we like it or not, Bitcoin and all the front runs technology a lot. And many times when Bitcoin tops and then sells off, it ultimately bleeds into technology and the NASDAQ. So it has a bigger impact there. But at the end of the day, due to the fact that some of the biggest AI names are big weightings in the S&P and the NASDAQ 100, we are all highly correlated there. So I think you need to have Bitcoin bottom for the risk-on trade to come back, and that will bleed into the rest of the market. And today might be the start of that. Breaking through 91,000 right now is a pretty powerful mark from a technical standpoint on Bitcoin. We'll have to see if there's follow-through. But the interesting thing is once that asset gets going, it can be at 100,000 in the blink of an eye. So we're paying very close attention to this because it's a very positive and bullish development if it holds these levels today.
Yeah, I mean, that is bullish because obviously I wrote this monologue a while ago and it was 88,000 when I wrote it. So now we're another $3,000 higher than that. And that is good. That is good news. And hopefully that can help bring some things back to the fore. I still think that there's a chance for a Santa Claus rally. I mentioned this in the last segment to Kevin Mon. There was a study by the biggest 5 banks and their expectations for the S&P 500 by the end of next year, so Christmas of 2026. And all 5 of them had the S&P 500, which is 68 and change right now, between, say, 7,500 and 8,000. Are you on board with that?
For me, I like to look at the market from quarter to quarter. I think so much can change that it's really difficult to try to predict where something's going to be 13 or 15 months from now. But I will tell you, going into this month here, there's been a major pivot with the Fed. And I think the dips should be bought again this week and next week. I expect Powell to not be extremely dovish on his press conference, and that's going to cause some volatility. But I also expect President Trump to announce a new chair of the Fed, which will be perceived as very dovish, and they will be dovish. And I think the market will look through that. So I think these first 2 weeks are going to stay choppy. I think you need to buy that chop because I think the last 2 weeks of December and the first quarter of 2026 could be very, very strong. All bets are off after that because it's going to depend upon what the bond market's telling us.
So it's interesting. Maybe we should get a VIX market on the expectations for a rate cut from the Fed, because if you remember, it was around the last time he cut rates, we had a 90% chance that there would be a rate cut this December the 10th, next Tuesday, or whatever it is, the 10th next week. I guess it's Wednesday. But that plummeted to like around 35% chance of a cut on the 10th. And now we're back up to about 88% the last time I checked when I was doing this, writing these monologues this morning. That's a pretty huge move in expectations for rate cuts next Wednesday, don't you think?
It is, and there's no coincidence that the market bottomed a couple of weeks ago when the probability of rate cuts started to increase. So the market spoke very loudly, and that should be very clear on how important the Fed is to needing to be cutting rates right now from a stock market perspective. And so I think it's a given that they are going to cut. If they don't, we will blow through those lows that we saw a couple of weeks ago. I think more importantly is going to be the narrative that they say during the press conference, because the bond market's usually right. We have a very high probability of a rate cut. And whether the Fed will agree to this or not, they do watch the markets, even though they say they don't. And the last thing they're going to want to do is make a big surprise that could cause a big drop in equity markets.
And hopefully, Mr. Powell doesn't take it as an opportunity to be political. I kind of felt a little bit like that the last time he spoke in that last meeting, when I do believe he absolutely changed the narrative when he said, by no means is it going to be a foregone conclusion. I think that a lot of things really started there, and then we started to worry about this carry trade at the Bank of Japan and tightening liquidity there, because that started to move our 10-year yield. I mean, everything starts to move off of everything else. Like you said, there's a lot of things that are pretty highly correlated there. But let's get back to the Fed for 1 second. Any thoughts on who the next chair would be? Are you in the Hassett camp? Where do you stand?
I think they're going to pick Hassett. I personally think Rick Rieder is probably the most qualified, and the reason why I say that is, he knows the bond market very, very well. And I think the end of next year, second half of next year, is going to be very challenging, because you're going to have a dilemma of a Fed that wants to be dovish, but you could see growth get so hot that we cause inflation to accelerate again because of how strong the economy is in the equity markets. My concern is if the person that is leading this doesn't understand how these capital markets work in the fixed income space, they could break something. So I think Rick would be a fantastic choice. I don't think he's actually going to get it. But any one of those choices from a market perspective in the very beginning, I think will be rewarded by markets, because they're going to be looked at as dovish, and they will be more dovish than Powell. I just worry months later, when we get through the honeymoon stage, what they're going to do if the bond market starts going in the opposite direction.
I couldn't agree with you more. I just got done talking about that in the last segment, but you could see that bond market make a run towards 5%. I think you could see unemployment make a run towards 5% too, with all this artificial intelligence replacing, the robots and AI replacing people. And I also don't think inflation's dead either. I think it's going to be really interesting. That's why, whomever it is, I'm just glad that we've got Scott Bessent over all of them, kind of maybe keeping an eye on things, because I think Scott Bessent's fantastic, and he's got a great pedigree about bond markets and stuff. He knows what he's doing, because he used to work at that quantum fund with the Mr. George Soros. I think maybe people might have heard of that guy before. But anyway, Eddie, thanks for being on, brother. I know you're busy. I appreciate you. All your content's fantastic. A lot of people on the Cowguy Close really wait to hear what you have to say, and I really, really do appreciate you coming on. Thank you very much. All right.